Hello, and to continue on our real estate education, Real Estate Riches by Professor Dolph DeRoos. Hi, I'm Ria, and let's begin. Analyzing deals is the next chapter, and I'll be discussing on yield and cash on cash return. Remember the formula 100 is to 10 is to 3 is to 1? Now 100, that means we've got to look at every day 100 properties, and based on our criteria or standards, we can offer 10 properties, and out of those 10, 3 may be accepted, and out of those 3, 1 is a good buy. And that's through either purchasing, either all for cash, or purchasing using other people's money or the bank's money. Now, let's say the property that we're planning to purchase is $100,000. So that's the purchase price. Now, let's say the rental income of that property is $10,000. So the yield is $10,000 of rental income divided by the $100,000 purchase property. So your yield is 0.1 times 100. Why do we multiply to 100 to get to a percentage? So the yield for this particular situation is 10%. Now, the yield does not take into account how much cash we put into the property. Cash and cash return is a much better way of determining if it's a good investment or not. Let's say we're still purchasing the same property worth $100,000. And let's say we put in our rental income is still $10,000, and we're purchasing it for $100,000. So our cash on cash return is 10%. How did we get that? 10,000 of rental income per year divided by 100,000 of your purchase price to give you a cash on cash return of 10%. Now, let's say you want to use a down payment of 30,000 with a mortgage of 70,000 at an interest rate of 7%. Now, to know how much interest we're paying for the year, the calculation would be 70,000, which is our mortgage, times 7% interest will give you 4,900 of interest per year. Now, to calculate the net rental income after deducting the mortgage, so 10,000 minus 10,000 rental income minus 4,900 of the interest we pay for the year, that will give us 5,000 of income. So to get the cash and cash return, that's 5,100 income divided by your 30,000 down payment will give you 0.17, and we multiply it by 100 to get to a percentage. So that will give you 17% cash on cash return. Now you notice that the purchase price is still the same, which is 100,000. The rental income is also still the same, which is 10,000 per month, but there's a big difference of the return from 10% to 17%. Remember, 10% is using all of our money, 100,000, and if we borrow money from the bank and our down payment is only 30% or 30,000, our return is 17%. Now, you have to consider that other expenses are still not factored in, and they are operating expenses such as repairs, your property taxes, your home insurance, and the greatest thing too, the depreciation is also not factored in here. I'll discuss more on that on the next chapter, on the next video. So I hope you learned something. Take care and God bless.